when I drive 2 hours round trip to remodel my STRs, is it best to take mileage or use gas receipts?
So the strategy here is you always need the mileage. So you need to track your mileage. But when it comes time to tax time, you look at the numbers and go, which one's more advantageous? So what do I mean by that? Say your 2-hour drive is 100 miles or so. So if you, at the end of the year, total up all of your car mileage and say you drove 10,000 for business and 10,000 for business, 10,000 for personal, 20,000 total miles, all of your gas receipts are going to be 50% deductible. But your mileage deduction is going to be roughly $6,000, whatever the mileage rate is up to. So I'm guessing you're probably spending more on miles than gas. But again, you need to track your mileage either way to determine that. We always recommend an app like MileIQ. There's some other ones out there as well, so that every time you get into the car, your phone asks you, is this a business or personal trip? And then you just categorize appropriately. And then the GPS tracks how many miles you spent. If you haven't been doing that, Google tracks everywhere you go, unless you turn that off. So you can go out to your Google profile and determine where all of you've gone over the last, however many years, and get your mileage from that as well.
Yeah, and I would say just general rule of thumb, like if it's if the car is less than $30,000 purchase price and you're not super high income, you'd be better off most of the time just taking the mileage method, like doing stretching it out over 5 years, like doing an analysis. If the car is more than $30,000 and you're higher income, it is probably best to see if you can take and use not the mileage method, but actually depreciate the vehicle.
Yeah. And keep in mind too, if first of all, there's rules around, if you take mileage or costs incurred on the car, you have to kind of continue that depending on your facts and circumstances versus a car that you buy outright. If you take actual expenses to claim the depreciation, so this is more for Andrea, in future years, you're also going to have to take the actual expenses as well, because that mileage numbers consist of operating costs and depreciation. So you can't double dip on depreciation by taking miles later. So lots of things to consider there. But yeah, I would say at a minimum, make sure you're tracking your mileage because you need those regardless.